This is the trading log for September 18th. For the false break strategy, this is stage 2. So the first stage was 200 trades, and then evaluated kind of what were the most profitable. There was 3 different kinds of trades. There's a true break, false break, and bounce. The most profitable out of those first 200 trades were trades on the daily and 4-hour and 1-hour time frames. That's where so that is what we're focusing on for stage 2, specifically on false breaks. So the false breaks are on key market levels. Key market levels are established in order of preference on the daily and the 4-hour and 1-hour. So the strategy is described here, and there's a pre-trade checklist to go through. Begin recording the trade, as I'm doing now, marking the daily, the 4-hour and 1-hour, and so I'll do that step here. So the daily that we're about to trade here is this one here. We have the sort of creating range here, confirming candle, confirming, and then we're hitting it again here. Look at 4-hour. I'm sorry, this is on the 4-hour. That really should have been the daily. Yeah, it's much cleaner on the daily. On 4-hour, there's a few. I don't know why I lost all my key market levels earlier, but here's another one. And there were some here, but they're not going to be relevant anymore. Yeah, well, I lost everything that was on here. I'm on the wrong account. That's why. Fuck. Okay, I'm going to stop the stream for a second. Or stop screen sharing for a second because I'm on the wrong account. There we go. I actually need to re-put in the entry I just had. So this is the level we talked about earlier. This is the false break. This is a 2-candle false break, and then confirming. So let's go ahead and draw that in. And this is the false break that we're looking at right now. Just to kind of talk through that. False breaks are happening, or we're counter trading retail. So when price approaches a resistance, like as in this example, and price pierces it, a lot of people are trading kind of breakouts. And so our goal is to go short if that price does return, and enter short as our stop losses are being hit. In this case, we're live going to do the opposite, which is we're hitting a key key support here. And if price rises above the support, then we're going to go long on short stop losses. Let's turn off this fucking moving average or whatever this is. Okay. And I made this tool to calculate the correct position size for stop losses and entries. This is going to be the entry and the stop loss here. This is a really small account that's just created just for validating this strategy. So we want to make sure the strategy is profitable before we use real money with it. And a big profit is here. So one thing that we need to check for is that the take profit is within the range that's been established already. Our previous false break was this 2-candle false break here. It was breaking this level. There's a creating candle, confirming, and then a false break. So this is a pretty well-established range that we're going to probably crab inside for a little while. For entry, our entry is here. Our stop loss is at this low. Then let's confirm that the low here is 18,461. Yeah, correct. I think profit's at 20085, which puts us right here in the middle. To be honest, this could be a larger, probably 4-to-1 is the right ratio to go for here because this is pretty early in the channel in this range. So let's go ahead and change that. First, I'm just going to put in this order with the stop loss, and then we'll calculate what the 4-to-1 ratio is like. Okay, I already did that. So let's recalculate. Stops is 406. That's 4 plus 18,867, 20491. That's still pretty. That's good, but let's stick with that because we have not hit any trades with a more than 3-to-1 risk ratio so far. So we could go for 5-to-1, but in this case, we'll stick with just 4-to-1. Also nice about counter trading retail for things like false breaks is that we are 3 hours into this daily candle. So we're on weekday volume. You can see this volume is really low for the price change versus maybe something like maybe this candle here, which much smaller amount of price change, but volume is much higher. So volume is low. The price, this price movement does not have much momentum behind it, and so it's more likely to be to reverse. That's the next trade. That's trade number 17.